All right, peoples, let's get started with AMZ and Amazon. So what happened? Well, a fair amount, obviously. I'm not going to reiterate all the market machinations here because I did it on Misty. But so let's jump into Amazon. So needless to say, it was way down and came back fairly substantially like the rest of them. The good news is it looks like Japan and the Nikkei were up 11% in Asia. So that looms well, pending no other kinds of things like Iran striking Israel, more closer to war scenarios. But just based on the Nikkei, that looks pretty positive for today. So what happened yesterday? Well, the net, it was down 4.10, right, on that scenario. So let's go take a look. Hold on, I got to do one other thing here. I got to recopy something on another sheet. Okay, I got it back in play. All right, so the 410 versus 345, what did we do? Well, this is what I was grabbing for you guys. So Amazon, by the fact that 75,000 shares, sorry, 50,000, remember they're in increments of 25. So 50,000 shares were additionally bought yesterday on the big sale. A lot of you that like your favorite funds, I'm sure you bought. That was smart to do. It was a little scary at the beginning, not knowing where it was going, but sometimes you have to have a little faith. I don't think we're clearly out of the woods yet. I think we could see we're clearly seeing a bounce. I expect a bounce. I'll show you when I get to the weekly on the charts. Doug from Houston asked me to do that. So I'm going to give you guys more in-depth charting, what you can look for, probabilities. And remember, peoples, um, this channel isn't indifferent to any kind of support, any kind of help. I appreciate the likes. I appreciate the subscribers. If anybody ever wants to do super thanks or wants to help, I really try to do all the analysis that you guys ask. So all I say is remember, I'm doing this. It's taking away sometimes from my swing trading and other things. It is a labor of love, but don't forget me at times when it comes to different ways to support the channel. All right. Appreciate that. So what happened? The 185, right? Three different scenarios. Whenever you see the same one, so it's a buy. They use the monies coming in right at the 200. Well, look, we're trading down at 161. No secret there. So you're going to get a lot of money, and I understand that. I don't blame them, but the liability builds up. I don't think it's going to impact us on our payout. We're looking good. So we did 185 additional contracts. And by buying a call and selling a put right here, we created our synthetic, right? That puts money in the pocket. Bought for 9 cents, sold for 38. We additionally sold a weekly now with 4 days remaining, the 167.5, which is not far out of the money, 4%, something like that. And we should bounce, and I'll talk about that on the chart. So we might overrun this, but in general, we look pretty good on the remaining ones. So that's what I got relative to what was added. Let's go look at the synthetic, but you can see here, I did update all the cash where it counts on my holding sheet. So I'm not going to go through all of that at the moment. But that's how they got money by the 50,000 shares that were added. So what we added here was a small, but every little bit helps, $20,720 because we wrote for $1.12, 185 contracts at a strike price of 167.5. So let's go look at the synthetic. So here we bought for 9 cents, sold for 38.61. So you can see that put, 712,000 plus, and we add that to our former amount of 3,295, and we're over 4 million as far as collected on our synthetic, not without a big liability, right? The liability's out there, but I'll take it for now. And this will have to get rolled. So I suspect they will roll it to a 190 or something like that. You don't want to go all the way back to where you're trading at, like a 170 or something, because you'll take a too big of a hit. But let's see what they do. They have choices there, or to say in the option world, they have options. No pun intended. I love those jokes. Okay, guys, small humors. When you've had the kind of stress we've all had in these markets, sometimes you need to laugh, you need to smile, uh, at times. So let's jump in here to the weekly. So we've covered the synthetics, we covered the individual sell of the naked weekly call. What's the summary? Well, the summary is we have 10,300 positions, all on 8-9, and obviously these are the little guys. This one is one without even saying it, right? 22% out of the money with 4 trading days for Amazon. Yeah, you've won that one. This one, eh, I, I see the potential for this bounce. And let me get in here with you guys. So when I make the chart bigger, going back multiple years, they don't always show the gap, right? We gapped down. Well, anybody that understands technical analysis, usually gaps get filled. They don't always get filled, and they don't always get filled quickly. But if you have a move in that direction, it's an excellent target. So when I showed this one, I was trying to find my support line, right? So this was major tops, which means we'll get resistance here at 146, 147. It's hard to tell the exact number. And then when we follow this, this is a good indication with 2 touch points. See, if we go up here, we've already gone down below that. So we look for that same 146, and this gives you fairly strong support. So flipping to this chart, right? I think we're very likely to bounce up here to 176. We're 161 now. We could run up to 5, 6 points today. Hard to say, right? The Nikkei was up 11. That, along with the global contagion of our unemployment, but mainly the Japanese yen carry trade, and the fact that that market was seizing up. So when it further went down Monday, which is ahead of us because of the dateline, some 13, 14 hours, depending on whether you're measuring from East or West Coast. But bottom line, they've already closed their markets before we've opened ours. And the same thing as I'm talking to you now, your early AM, they've closed after 2 massive days down. I thought they would bounce, and they have 11%. That's a very positive sign for us. So it's hard to say how long it's going to take us to fill the gap. It could be a day, it could be a week. But I think that might be the limitations. If we get above that gap and get above, then that changes the dynamic. But I'm not expecting it. I'm expecting us to go back up, like this. It's not a single day. And we could have a week to 10 days, and then we can turn and we could come right back down. We could come as low as 140. I'd like to see us stop at this 146, but we could come back with an A, B, and our C could be slightly lower or somewhat equal, right? So this gives you an A, this gives you a B, this gives you a C. And overall, you kind of have a little bit of an inverse head and shoulders, because we definitely don't want to get way, way down here. Okay. So this would be a positive momentum gathering sideways to play this out after getting to 175 and then get back up there. Because I've always said September is going to set the direction for the market. And if we get this flush out in August, we may in fact melt up. We may get a slingshot effect up in September. I've been worried about a mini crash in September, but if we get this mini crash that we're starting to experience out of the way in August with these rate cuts or even an emergency rate cut, which might be a little late, but the momentum would be positive and up we go again for a while. Not saying that's going to last more than a few months, but I think everybody would prefer that. It's not exactly a soft landing, but it's a lot softer than what it could have been. So that's my analysis of the markets and in particular of Amazon, because obviously they get affected by the NASDAQ, the tech heavy, Mag 7 and the market. So how we doing on our rest of everything? Remember, I always let holdings tell me everything here. So here's our synthetic, 39,000 in the hole. 39,000. It wishes it was 39,000. 39.8 million. You can see it right here. Boom, 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 right? Just stair stepping, and big. So I see the turnaround, right? I see it start moving back up here. We may just very well get to these levels. All right. So what does that do for us in the rest of it? Well, these looked ugly going into Monday. They don't look bad at all now. This was like $1.80. One of these others was two something. So we've gained on these massively, right? But we're not out of the woods because remember, right? This 176 is sort of the height of the gap. I sure don't want us to run to 176 this week. Now we could enter day and pull back. That would be okay. But I'll just be happy at stair stepping 161, 165, 167, 169, have some upward, maybe pull back to 165 and work our way up to that point and win our weeklies, guys. There's no doubt this one is one. This one is such a small amount, right? We're behind now on it. But that's what we got at stake. We got 2 million at stake. So the time is looking in our favor. So what do we close at? 1849. What's fair value? 1852. Okay, guys, we learned a lot. Let's go look at our payouts. That's what you guys care about. Okay. So we collected more money. This jumped up even more than it was. A little bit here, 20,000, and the million something, or sorry, the 750,000 here, 740 something, and this was 20. So that brought us to $1.14. So I'll close this month out on this. And I had a 74% prediction, but I had said somewhere between 70 and 80. Now that's creeping up as far as the percentage, but I'm going to come out and report on those later today after I get them on all the funds. So this is our current price. That's why I show it relative to the yield. So that's what we got, peoples. So hope you enjoyed that. Again, this is Bruce with Targeted Wealth Creation, not financial advice. I'm not a financial advisor. Always check with your accountant for tax implications. Always check with your financial advisor for making investment decisions. Again, have a great day ahead and let's get going on our bounce. How about 39? Okay, guys, bye for now.